AMD is by far the most requested stock on the channel. I got so many requests of people asking me to do a video on AMD. And I have to be honest, guys, I'm not a semiconductor expert. I've never ever owned a semi stock. Never invested in them. But AMD might be my first ever semiconductor investment. It might be my first one. I might do something on AMD. I'm going to share it at the end of the video. And it's looking very interesting. I'm liking it very much. I'm going to tell you why. Give you my thesis as always, give you my opinion on AMD. If I believe it's presenting an amazing opportunity, down 36% over the last 6 months, or maybe AMD is a value trap and it's the next Intel, like a lot of people are saying right now. They're saying it's the next Intel. Maybe it's true, maybe it's not. We're gonna find out. And I really hope you enjoy it. Now, AMD, it's been a disaster. It's down a lot from even all-time high. It's down like 48 or almost 45% from all-time high. So it's been terrible. And a lot of interesting things have been happening to the stock. The first one is a lot of analyst downgrades. This is what happens. Whenever the stock goes down, all the analysts, they start downgrading the stock. When the stock goes up, they start upgrading it. This is what they always do. This is what happened to Meta. This is what happened to Google. This is what happened to Uber. And this is what's happening to AMD right now. The analysts, they always do the same. And I know a lot of people, they keep saying every stock is the next Meta. But from me, looking at AMD over here, the way it's down 49% from all-time high, on no news related to the fundamentals, it's really looking like the next Meta. I mean, I am seeing the potential of an explosive move over the next year, 2 years, 3 years. And it's just a beautiful setup. But the analysts are downgrading the stocks. HSBC from 200 to 110. It's been absolutely brutal. Goldman Sachs downgrading the stock from 175 to 129. It's been terrible. Now, looking at the latest report of the company, they grew earnings 18, or I should say revenues, 18% year on year and 17% quarter on quarter. Massive revenue growth. We look at the data center segment of the revenue growth. This is their AI chips and other kind of chips that companies like Microsoft, Oracle Cloud, and other kind of companies, even Meta, I believe. This is what I read on X, that Meta only uses AMD chips for their AI project. I forgot what the name was. But the revenues grew 122% year on year. Massive revenue growth in data centers. In terms of their operating margins, from 19% to 29%. The company is killing it in data centers. You look at client segment, which is mainly the Ryzen chips, which is used in many different computers. It's up 29% year on year, and operating margin is up 50% from 10% to 15%. So the company has been absolutely killing it. Now, I have to admit, they've been facing a little bit of weakness, a little bit maybe in gaming and embedded revenues. But I read a lot about those two segments, and I read that the company isn't really too focused on gaming and embedded, especially gaming, because it's mainly lower growth and lower margin kind of revenues, and they've been more focused on clients and data centers because there's more TAM, higher potential, and higher margin kind of revenues, because they've been more focused on those two areas of the business. So the company's been growing, it's been doing very well. The balance sheet, is very good. They don't have a lot of debt. They have $4.5 billion of cash and cash equivalent, and total debt is only $1.7 billion. So they have a net cash position. Beautiful, amazing stuff. And the question is, if AMD is so amazing, if data centers are growing 122%, operating profits are expanding, and everything is fine, and everything's looking so good, why is AMD going down? Well, it's going down for a few reasons. And this is what Goldman Sachs said when they downgraded the stock. They said that they remain optimistic about AMD's ability to take market share from Intel. And of course, they're going to continue taking market share from Intel. But they are concerned about the rise of ARM-based custom CPUs. And they believe that Intel is falling behind. I should say AMD is falling behind in this technology. But based on what I read, the main bearish sentiment and the main narrative, the main concern is around AMD falling behind NVIDIA in the whole AI kind of race, because NVIDIA has this product called Blackwell, and I read about it, and it seems like an amazing product. And for AMD, their AI chips were not a huge success. Although, again, I read on X that companies like Meta, they're exclusively only using AMD's chips for their AI stuff. And they've been doing very well and ordering massive orders of those chips. But I did read a lot of articles comparing those chips together, and the Blackwell beats AMD's chips any day. And there's a lot of concerns that AMD is falling behind. And now people are saying that all of a sudden, just because of this one area, AMD is going to become the next Intel. And I love hearing those arguments. And it reminds me of so many amazing companies I bought just because I heard something, but I haven't seen it on the income statement. I just showed you the income statement. It couldn't be better. Data centers, including the AI narrative, growing 122%. But people now are saying that AMD is the next Intel. And for me personally, I'm loving it. But again, I'm not someone that's a semiconductor expert, and I'm not really here to debate why the AMD chip is better than the Blackwell chip, but I know AMD has a good CEO, and I'm sure they will likely figure it out. But I'm going to talk about some common sense valuation analysis, and I'm going to take a conservative approach in my valuation model to show you that even if AMD does not grow as fast as expected, and if we price in AMD falling behind an AI race and all that kind of stuff, you could still make money on the stock at this price. Okay, and this is the CPU market share between Intel and AMD. And as you can see in the red, Intel has been taking market share, or say AMD has been taking market share from Intel, and they're going to continue taking market share. Intel is dead, in my opinion. I mean, the company is being mismanaged. They don't have a CEO now. I don't believe they do. I mean, correct me if I'm wrong. And they will likely continue taking market share. And as they take more market share, this is alone going to be billions and billions of revenues for their clients kind of stuff, which is alone right now growing 29% year on year. So there's still massive tailwinds and massive growth ahead from this alone. This is excluding all the AI kind of stuff that AMD will likely take a percentage of this market share. And if you look at Intel versus AMD for CPU in terms of expectations, now they have 31% market share. They're expected to take up to 39% market share by 2029. And I would not be surprised if they ended up taking a larger share from Intel by 2029. And this alone will provide massive growth for the company going forward. Now, if you look at the PE ratio, it's trading at 25 times earnings. Now, the company just a few months ago, like 10 months ago, it was trading at 57 times earnings because of the AI narrative and all these kind of hype stuff things we had. Now it's trading at 25 times earnings. The mean was 37 times, as high as 65, as low as 14. Now it's trading at 25 times earnings. To me, that looks pretty interesting. But I have to warn you, there are a lot of people in the comments are going to say, yeah, but AMD is trading at 100 or 200 PE. Well, first, you don't have to look at the trailing earnings. You have to look at forward earnings. With growth companies, you always have to look in the future. You don't invest in the present. The second thing is, if you look at GAAP earnings, it has a lot of one-time expenses due to their acquisitions, amortization of assets, and a few different things. So you have to look at the non-GAAP EPS for you to get the forward PE of 25 times earnings. And the main problem with using non-GAAP is a massive stock-based compensation, which isn't only with AMD, but also with Intel, also with Adobe, and also with the Qualcomm, Broadcom. And with most of those kind of tech companies, they have a lot of stock-based compensation, and it's just something we have to deal with. But at least AMD has been buying back stock to offset the dilution of the stock-based compensation. And the only time we had dilution with AMD is whenever they did an acquisition that has actually created more value per share than they issued. So yes, they diluted shareholders, they issued a lot of stock, but they created more value per share than they issued. And in this case, the dilution would be okay. So dilution isn't always bad if the company is creating more value than it's actually diluting or than it's actually issuing. And this is how you have to look at that stuff. And to me, it looks very good. Now, looking at the growth of the company, it's expected to grow 51% in EPS in 2025, 37% in 2026, 28% in 2027, and 30% in 2028. This is massive, massive growth. And if you compare that on the PE ratio, 25 PE, for 50%, 37, 28, and 30%. This is dirt cheap for the company. That's why I said AMD is too cheap to ignore at this price, because you're paying less than a 1 peg ratio, less than 1 price to earnings growth for a company that's riding the data center AI tailwind with an amazing CEO and semiconductors in this overvalued market with no debt. Yeah, to me, this is unbelievable. This is just, to me, just looking at that, it's looking like an amazing opportunity. But this is not enough for me to determine that AMD is a buy. I'm gonna look into my valuation model, and this is what I'm gonna. This is how I'm gonna do it. And I believe, the 51%, 37, 28, and 30, they might be a little bit too optimistic. Maybe not. Maybe they ended up being conservative. But maybe they're a little bit too optimistic in case the bears are right and AMD falls behind Nvidia and all these kind of things, and it's dead and it's the next Intel, all those things. Okay, let's assume it's the next Intel. Okay, so I'm not gonna take all those fancy growth numbers, I'm gonna reduce them, and I'm gonna take a lower PE ratio for my estimates. And for this valuation, I'm gonna use next year's number, which is $5.04 for earnings per share. And normally when you have over 40 analysts for next year predicting a number, the company, they tend to not overreach this number. Like maybe they either slightly beat the number or they slightly miss on the number, but you never really have where, they miss it by 50% or they exceed it by 50%. It's possible, but it's normally rare. So I'm just going to use this number because I believe it will likely be accurate. But after that, I'm not going to use 37%, 28, and 30%. I'm going to use 20% instead. So I'm using 51% for next year, then 20% instead of 30% for the next 4 years. So I'm shaving off 10% of the analyst estimates for the growth. I'm getting $10.45 of earnings per share 5 years from now. And this is my valuation model or price target for the next 5 years on AMD using 20p, 25p, and 30p. And I know I'm going to get a lot of comments saying that AMD could go much higher. And I believe it could 2, 3, or 4x in 5 years, maybe a little bit before. I'm just being honest. It has very bad sentiment, and I've seen it before. But this is my conservative estimate. Using 20p ratio on AMD, I get $209 5 years from now, or 80% on the upside. Using 25p, I get $261 5 years from now, or 125% on the upside. Using 30p, I get $313, or 170% on the upside on AMD over the next 5 years. This is factoring in AMD falling behind in AI race and AMD being the next Intel and all these kind of things that people are saying right now about AMD. And this is how I would conclude my thesis on AMD, which is bad sentiment, check. Low PE to growth multiple, check. Massive tailwinds with AI, data centers, check. And robotics, which AMD is working in, that's check too. Great balance sheet, check. Great CEO, check. AMD isn't dead. Anytime you hear something is dead, example, Google, Meta, because of ChatGPT, TikTok, it's time to buy. I've seen this before. AMD is presenting a great opportunity at this price. This is my thesis. And I'm just being honest, guys. I might not end up buying AMD because I'm seeing a good setup with options going into 2027. Mainly it's like a bullish call spread. You could look it up. And I'm seeing an opportunity to, 10x on the upside, and downside is like 0.5% or 1% of my portfolio. So I might do that with AMD, and I share what I do in my group if you're interested. This is the link with options and other things. But for me personally, AMD is a good opportunity. It's looking very good. The chart is weak. It might go a little bit lower. But if you're a long-term investor, I would say it's a good time to be researching AMD and looking into it. Whenever people are saying it's dead, then it's the next Nvidia, next Intel or whatever, this is normally the best time to be looking into that stuff. And this is all I had to say about AMD, not financial advice. I hope you enjoyed it. If you did, please press the like button and maybe consider subscribing. So I'll talk to you in another video.